Good morning. Welcome to Market Day Report. Well, as we get things started on this first day of November, also Dia de los Muertos. I hope I said that correctly, but we're glad you're with us either way. How about we look at how corn traded in the overnight session as we go to the table, up 2 1/4 on the December 413. By the way, we've got some interesting news that's come out overnight about corn and soybeans, and we'll get to Brian Hoops in a moment with that. But again, corn higher across the board. Also in the overnight session, higher trade for beans with November up 8, 9.90 but the January finding that 10 handle again as it gains 8 cents on the session. Now to the wheat markets, we were higher in Chicago, July 6.11. That was up 4 pennies on the session. Hard red, July 4 higher, 606.5. And spring wheat, Minneapolis, December contract, nickel higher, 609.25. But what about cotton? Could it find positive territory? The answer, yes, after a sell-off over the last few days. December 70.78, up 121. Brian Hoops, President, Midwest Market Solutions. All right, Brian, some news overnight. What was it?
Well, good morning, Tony. More private export sale announcements. We had maybe one day where we didn't see anything, but last couple days, more big sales. It was 132,000 soybeans to China, 198,000 soybeans to an unknown destination, which the trade will believe will end up being China. Then a huge sale of corn, a total of 781,000 metric tons of corn sold to Mexico. Now, the vast majority of that, except for one cargo, is going to be for this current marketing season, that one cargo for the next marketing year. And then a 30,000 bean oil sale to India. So a host of sales to finish out the week. It should be supportive to these markets this morning. We're always looking for what's going to drive us in price direction. What's the new feature that's going to give us some direction? We know weather in South America looks really good, and that is kind of on the back burner when you have these type of sales. So we should get at least initially some sort of a rally. Now we could see some pressure after that, maybe some hedging because of the good South American weather, maybe some old crop sales. A lot of producers calling in saying their time's kind of running out. They need to make decisions on what to do with that inventory that's at the elevator, either sell it, cash it out, own it back on paper, something. So we may see, some selling coming into the market after this, but at least initially it should be supportive. There's also some talk about Argentina corn planting. We're up to about 28%, I believe, done for the year. That's ahead of last year's pace, and it's like 1% behind normal. So as far as any delays, as far as planting in South America, they've really caught up now to back to their normal pace at least, and now they're getting more rain showers on top of that. So it's a really ideal looking forecast out of South America.
Okay, Brian, just going back to my business days, and the quote, "Sales fixes everything." I guess we can tie that with nothing cures low prices like low prices, but at the end of the day, sales could fix this, right?
Yeah, to an extent. We have a lot of supply here in the United States, so it's great that we're making these sales. In fact, sales are above last year. Like we talked after the export sales numbers, were 34% ahead of sales for corn year to date compared to a year ago. About 17 for soybean or for wheat, and now about 9 or 10 for soybeans. The soybean sales have been lagging badly to start the marketing year, but because of all these sales in September and October, we've caught up and actually ahead of last year's pace. So that does cure a lot of things. The big issue will be, are these sales that are on the books now, will they be delivered? And that we won't know until we get into more December, January, February, when these countries take delivery, or do they get canceled in favor of South American supplies?
Yeah, I guess that's a lot like having that gift card. You can't really take advantage of it until it's spent. The business can't until it's actually used in the business. So, all right, hang on. We'll take a break. We'll come back, and we've got a stack of things to talk about in the livestock market. Market Day Report continues in a moment. So we retired that October contract on live cattle at the end of the month, which was yesterday, and had a big rally on it as it had to converge for cash cattle. We'll talk cash cattle in just a moment, but how did the rest of the market end? Let's look at the December contract for live cattle, off 12 cents at 186.30. We saw a little strength in June and August, but again, lightly trading in those outside months. Feeder cattle down 12 on the November at 245.37. January 241.32, off 65, lower across the board. And the hog trade was lower as well for the front 2 months. December off 57 at 83.80. February $0.50 lower, but the rest of those 2025 contracts were higher. Let's bring back in Brian Hoops, Midwest Market Solutions. Brian, again, cash cattle, we finally saw that converge yesterday.
Yeah, we sure did. October was a very widely traded contract, about $8 trading range on the day of expiration because the volume was so thin, and ended up settling sharply higher. So it's kind of a target, I think, for December to eventually work towards if we're going to see that cash maintain some strength. And that's really what trade is trying to decide as we go into the weekend. Was the last 3 days of sell-offs in the cattle. Was it all technically driven? Is there fundamental cracks? And we certainly can see some with the cutout values turning lower. Steer weights came out yesterday. They're now full 30 pounds heavier than a year ago. They jumped last week by 8 to 10 pounds. That's some negative numbers when you start talking about lower cutouts, higher weights. You just need less cattle to kill, and it was a disappointment. I thought this week that the cash traded only steady in the Southern Plains after being called $1 to $2 higher. So the outlook for next week, steady probably at best. I don't know that we'll see a big sell-off in the futures this morning. Right now we're kind of looking at a steady mixed type opening, but certainly this market I think is going to struggle on rally attempts in here because of those heavier steer weights and the declining packer margins fueled by those lower cutouts. It's going to be a struggle to maintain any strength here.
All right, Brian, thanks for the insight. We'll see you back here Monday morning. Actually, we'll see Brian on Monday morning and then the day after the election on Wednesday. Have a great weekend. Brian Hoops, Midwest Market Solutions.